Hello viewers, in today's session we are going to discuss about microfinance models. Alleviation of poverty and encouraging people to come out of this poverty is not a small task, especially in a country like India which is still in the mode of development. So, a number of key players have to come together in order to help the rural poor. One important player in this microfinance is government, both at the state as well as the central levels. Governments in India from the time of independence have been treating microfinance as the most important item in their agenda. The next role is that of fund providers, banks, microfinance institutions, international donors, philanthropists. There are a lot of people who are ready to provide funds for microfinance. So, they play a key role because they are the ones who are providing funds. Then next coming to regulators, Reserve Bank of India, RBI, they play the role of regulators, that is they make sure that the funds reach the intended audience, the funds are not misutilized, funds are actually properly utilized. So, that is the role of the regulators. Then coming to international development agencies, World Bank, IMF also play a key role. They also provide their support not just to India, but a lot of other developing countries like ours. And then finally, beneficiaries. Who are the beneficiaries? Individuals, joint liability groups, microfinance institutions, they are all beneficiaries in the microfinance field. Now, let us look at how microfinance delivery models work in India. Microfinance delivery is a dynamic concept. It keeps changing over a period of time. There are a lot of models that are developed in India and each model has its own pros as well as cons. Now, let us look at the basic framework. Microfinance delivery in India happens both through formal as well as informal channels. Whether it is formal channel or informal channel, ultimate beneficiaries are the same, that is self-help groups or individuals. But when it comes to formal channels, the money is flowed through NABARD, SIDBI or Rashtriya Mahila Kosh. Whereas, when you look at informal channels, it is the lenders, the donors, these are the ones who take the money forward. Formal channels, that is NABARD lends its money to commercial banks, regional rural banks or cooperative banks. Whereas, when we look at informal sections, that is the lenders and the donors, they give money to microfinance institutions, and these microfinance institutions could be mutual benefit microfinance institutions or single party benefit microfinance institutions or non-profit making microfinance institutions. Now, let us look at the first model of microfinance in India, the association model. Now, in this association model, the target community forms an association through which various microfinance activities are carried out. These associations can form around political, religious or cultural issues. These associations can then create support structures for micro entrepreneurs and other work based issues. The next model that we are going to discuss is called as the bank guarantee model. In this model, a bank guarantee is used to obtain a loan from a commercial bank. The loan thus obtained may directly be given to an individual or it could be given to a self-help group. Several international and UN organizations has been creating international guarantee funds that banks and NGOs can subscribe to, they can borrow from these institutions. These NGOs can then later lend it to self-help groups. NGOs can also start microcredit programs if they are so interested. Coming to the next model, the community banking model. This model treats the entire community as one unit. It establishes semi-formal institutions through which microfinance is dispensed. Such institutions are usually formed by extensive help from NGOs, that is non-government organizations. These NGOs also train the community members to explore their various employment opportunities. The next model that we are going to discuss is the credit union model. This credit union model is a unique member driven self-help financial institution. It is organized by and comprised of members of a particular group or organization who agree to save their money together and also to make loans to each other at a reasonable rate of interest. All the members of a credit union model share a common bond. They could all be members of a particular organization, they could all be working under the same employer, or they could all be members of a particular trade union, or they could all live or work in the same community. Now, let us look at the next model, the group model. The basic philosophy of this group model lies in the fact that weaknesses at the individual level cannot be overcome by individuals themselves. They can only be overcome by collective responsibility and security that is afforded by the formation of a group. This model works on the principles of solidarity, self-help and peer pressure. This model teaches people that unity is strength. This model has inspired many other lending models like the Grameen model, the community banking model and the village banking model, to name a few. The next model that we are going to look at is the intermediaries model. In this model, intermediaries play a critical role of generating credit awareness and education among the borrowers. Intermediaries could take up activities like starting savings programs, funding program links, training, education and research. Intermediaries could be individual lenders, NGOs, microfinance institutions and sometimes even banks as well. Coming to the next model, NGO model, that is the non-government organization model. NGOs in India have played a key role in the field of microfinance. Governments have given their support, but many non-government institutions also have supported and taken forward this microfinance movement in India. In fact, the success of microfinance movement in India can equally be credited to the government as well as NGOs. Many NGOs in India, they have also been active in starting and participating in the microcredit programs. They create awareness of the importance of the microcredit within the community as well as various national and international donor agencies. In fact, India has received funds from a lot of international donors because of the efforts of a number of NGOs. Next, let us look at the peer pressure model. Peers are the other members of the group. This model uses moral and other linkages between borrowers and other participants to ensure participation and repayment in the microcredit programs. Unless the initial borrowers in the group repay, the others are not allowed to borrow. Hence, there is a pressure on the members or the initial borrowers to repay. The Grameen model also uses peer pressure. We are going to discuss Grameen model later. That model also uses peer pressure to ensure repayment among its borrower groups. Next, let us look at the ROSCA model. ROSCA stands for Rotating Savings and Credit Association. It is a group of individuals who come together and make cyclical contributions. These contributions are then given as a lump sum to a particular member in each cycle. Now, deciding who receives this lump sum could be done by consensus, it could be done by lottery, by bidding or any other agreed method. Usually, the member who needs it the most, the member who has the most pressing need is given advantage over others, and that is basically the advantage that we have in a self-help groups, because members personally know each and every one, their family backgrounds, their family situations. They can borrow and lend easily, which is not possible in a regular commercial bank. A commercial bank follows regular rules and regular rules. If we do not fit into those rules, however important our need could be, we are not eligible to get a loan. So, that basically is an advantage with a self-help group, because each member knows others personally, they understand their problems. The next model is a federated self-help group model. In fact, a number of successful self-help groups in India come under this structure. Basically, any self-help group cannot have more than 20 members. So, it is not practically possible for a 20-member group to approach big institutions for loans, or even these big institutions cannot cater to the needs of just 10, 15 or 20 members. So, what these self-help groups do is a number of self-help groups come together and form a federated self-help group model. Sometimes these federated self-help groups have more than 1000 members also. This federated self-help group has a 3-tier structure. The first tier is the self-help group, the second tier is the cluster and the third tier is the apex body. At the cluster level, each self-help group is represented by 2 members and the apex body is usually made up of 10 to 15 members, and this apex body usually forms the link between the self-help groups and the NGO which is supporting it. Some of the examples of successful self-help groups in India which are in the federated model are Pradhan, Chaitanya and Seva. Now, let us look at the banking model. This banking model is more popularly called as the self-help group bank linkage program or SBLP model. This model was initiated by NABARD in the year 1992. Linking self-help groups with banks has greatly contributed to the growth of microfinance movement in India. In fact, bank linkage has substantially increased the resources available to self-help groups. As per RBI's priority sector lending norms, the money that is given to self-help groups is eligible for priority sector advance. So, this encourages more and more banks to come forward and lend to self-help groups. Now, linking of self-help groups with banks has also been emphasized in the monetary policy statements of RBI and union budget announcement that has been made from time to time. Monetary policy statement is a statement given by the central bank, that is RBI, regarding how to deal with monetary instruments. Now, again the banking model can adopt three different types of sub-models. This SHG bank linkage model is the most common one, that is, this is a linkage between a self-help group and a bank, but sometimes there are two other variations to it that we can also see. The second one is the microfinance institution and the bank linkage model. So, here it is not a self-help group that is tying up with a bank, but it is a microfinance institution which is entering into a tie-up with the bank. So, in other words, this microfinance institution acts as an intermediary between the self-help group and the bank, and sometimes the role of this microfinance institution could be taken up by an NGO. So, NGO, there is a link between the NGO and the bank, and this NGO acts as a connecting link or an intermediary between the self-help group and the bank. So, we can say that banking model in India has taken three different forms: self-help group bank linkage model, microfinance institution bank linkage model and NGO bank linkage model. Now, let us look at another very popular model in India, the microfinance institution model. Microfinance institutions are the associations of individuals that provide financial services to the poor. These institutions lend through the concept of joint liability group. They are an extremely heterogeneous group of institutions that could be registered as NBFCs, that is non-banking financial companies, cooperatives, societies or trusts. Together, they constitute 42% of the microfinance sector in India in terms of the loan portfolio. Microfinance institutions in India can be subdivided into three categories: non-profit making, mutual benefit making and profit making microfinance institutions. Microfinance institutions in India function in different ways. They could be NGOs which are mainly engaged in promoting self-help groups and their federations at a cluster level. They then link these self-help groups with banks under the NABARD scheme. Another alternative method is these NGOs directly lending to borrowers who are either unorganized into self-help groups or Grameen bank groups. These NGOs borrow bulk funds from Rashtriya Mahila Kosh, SIDBI or could be some national and international donors. Then we have microfinance institutions which are specifically organized as cooperative societies such as Seva in Ahmedabad or mutually aided cooperative thrift and credit societies, that is MACTAs. Then the final way in which a microfinance institution works in India is that they could be organized as non-banking finance companies such as Basic, Spandana, Cashpore, Share to name a few. Next, let us look at the joint liability groups. A joint liability group is an informal group that consists of 4 to 10 individuals who seek loan against mutual guarantee. These loans are usually taken for agricultural or other related activities. Usually farmers, rural workers or unemployed youth fall in this category. Each individual in a joint liability group is equally responsible for the loan repayment in a timely manner. There is no requirement for collateral here. Control and ownership of a joint liability group model usually lies with the promoting microfinance institution. The next model, a very popular model in India, is the Grameen model. This Grameen Bank concept was born in the village of Jobra, Bangladesh in the year 1976. Later, when this model succeeded, it has been applied across various places in India as well as other Asian countries. A Grameen Bank consists of a field manager and a number of bank workers covering an area of about 15 to 20 villages. The manager and the workers first visit the villagers, they talk to them, they familiarize themselves with the local people. In this model, bank goes to the customers instead of customers going to the bank. All the financial services like accepting savings or lending money or taking repayments, all those happen through regular meetings in the community. So, no individual goes to a bank, it is the bank that is coming to the individual members. Loans in a Grameen Bank model are dispersed without any collateral. The collective responsibility of the group serves as a collateral. The collective responsibility of the group ensures that no member defaults. The loan disbursement procedure of a Grameen Bank is in cycle. That means, the loan cycle is repeated and the size of the loan increases in each cycle. So, this is like a great motivator for the members to repay loans. If the group gets a loan of 10,000 this time and payments have been done in a timely manner, the next time the group is eligible for a higher loan. It could be 12,000, 15,000 or 20,000 depending on the agreement. Repayment rate in all Grameen banks is above 95% and the rate of interest that they charge is the lowest, and most of the members in a Grameen bank are women. One unique feature about this Grameen Bank model is it does not emphasize on income generation. So, whatever money has been borrowed, what is the revenue that is earned out of it or what is the profit that is made out of it, that is not the emphasis here. This model emphasizes more on improving the standard of living of people. So, loans in a Grameen Bank are mostly provided for housing, sanitation, education, etc. Now, let us look at the cooperative model. A cooperative is an association of persons united to meet their common economic and social needs through a jointly owned and democratically controlled enterprise. The reason it is called as democratically controlled is every member has a say in the working of a cooperative model. Every member, irrespective of his contribution, can decide as to how the cooperative works. So, that is the reason we say that it is democratically controlled. Now, these members could come from different sections of the same community, like they could all be from agriculture, they could all be retailers, or they could be artisans, handicraft workers, wholesalers. So, they usually come from the same community. The cooperative model relies on collective ownership. So, everybody owns it, it is not owned by one individual. Then local management and roots in the community are also other important features of a cooperative model. Whatever profits a cooperative makes, these profits are distributed to the members or they are added to the equity capital of the cooperative. So, this encourages the members of the cooperative to make more and more profits, because ultimately they are the recipients of those profits, they are the beneficiaries of those profits. Sahavikasa or Cooperative Development Foundation in Warangal district of Telangana is a very successful cooperative in India. In fact, this cooperative has convinced Government of India to come up with a legislation known as Mutually Aided Societies Acts. This legislation helps in proper flexible functioning of cooperatives in the state as well as the entire country. Now, let us look at the individual microfinance program. All along we have discussed about a group, but this model caters to individuals. So, in this individual lending method, microfinance institutions provide loans to an individual based on that person's personal credit worthiness. This method is more popular with those customers who need bigger size loans and can produce guarantee. Microfinance institutions generally base their decision on personal knowledge of the client, his reputation in the community, his income sources and the position of his business. Individual loans permit microfinance institutions to tailor their products specifically for the requirements of the customer. In this model, financial institutions have to make frequent and close contact with clients in order to provide credit products customized to the specific needs of the client. It is mostly useful for large urban based production oriented houses. Commercial banks, regional rural banks and cooperative banks predominantly adopt this model. Now, let us look at the business correspondent model. The business correspondent model was introduced by Reserve Bank of India in 2006 to allow banks to have third party non-bank agents extend their services right to the customers' local communities. This model allows banks to expand their outreach dramatically at substantially lower costs. There are many places in rural India which are out of reach, which do not have proper resources or infrastructure for a bank to come and set up their branch. But in spite of that, banks want to reach those people, banks want to provide access to those people. So, this business correspondent model proposes that all those areas which are inaccessible to banks can avail their services through a business correspondent, and this business correspondent is usually entity like a grocery store, a petrol station, a kirana shop or a company with a retail network, and they can be authorized to perform financial operations on behalf of the bank. So, places where a bank cannot go and set up its branch, it authorizes a business correspondent to act on its behalf, and this business correspondent is usually from the local area itself. Business correspondents are usually grassroots entrepreneurs. They serve as contractual representatives of the bank. They serve as a connecting link between the bank and the villagers. Their operations, the operations of a business correspondent include opening and maintaining accounts, handling small loans and providing other basic services. They usually carry a handheld device with them, and this handheld device is networked to the banking systems. So, whenever a person gives some money to be deposited in the self-help group account, that amount is immediately entered in the device which the correspondent would be holding it, and this amount gets reflected in the bank wherever the branch is located. And for all the services that a business correspondent renders, he is compensated through some fees or commission. Since these business correspondents are from the same community, they have local knowledge, they have greater understanding of the issues that are specific to that particular village, and they also enjoy greater acceptance among the villagers. So, if a villager has to hand over his savings to an outsider, he might be hesitant to do it, but if it is a person from his own village who has been running a kirana store or who is having a mechanic shop or something, he would be more confident in doing so. So, that is the biggest advantage of a business correspondent model. Let us look at one very successful self-help group in India, Kudumbashree. Kudumbashree is a very successful self-help group from Kerala. Kudumbashree literally means prosperity of the family. Kudumbashree is a poverty eradication mission of the government of Kerala with support from government of India as well as NABARD. This SHG empowers women to strengthen the economic backward people in village areas. One very peculiar situation that is seen in Kerala is that the farmers are increasingly moving away from agriculture and other agriculture related activities. They are moving to other better paid jobs in nearby towns or cities. Now, what this self-help group does is it aims at improving the productivity of women from these groups and employ them in agriculture related activities. As majority of these women are landless, the land is taken for lease for cultivation. The decline in farming is not just a problem for the women, but it is also a problem to the society as such. The state has to is facing food insecurity, is facing scarcity of food, and it has to depend on neighboring states for its food. An example that we can talk about here is Kerala is famous for coconuts, and wherever we go in Kerala we see coconuts, but they are facing shortage of people who can cut coconuts, because men are, since this is not a highly paid job, men are moving to other jobs. So, what Kudumbashree did is it trained women to climb coconut trees and cut trees. On an average, they need about 45 people every day to work in the farms. So, Kudumbashree has filled that deficit. Earlier Kerala was facing shortage of coconut cutters, but now Kudumbashree has trained women and these women are doing that job. Today, there are nearly 3 million women who are a part of Kudumbashree, making it the world's largest women's empowerment program. In fact, when Kerala experienced floods, Kudumbashree donated 7 crores as donation to the Kerala government. So, this itself speaks as to how successful this particular NGO is. Now, let us conclude. What I can say in conclusion is that microfinance in India has grown at a tremendous pace in the recent years. It has achieved significant outreach among rural households. It has reached even villages where there are no roads. It has reached even those places where transporting through boats is the only option. However, lot of it remains to be done. There are still a lot of people in rural India who have the talent, who have the potential, who are willing to do it, but are not in a position to do it because of lack of funds. So, therefore, microfinance models, products and services should be designed in such a manner that they are able to reach everybody. They should be flexible. Their aim should be to target the poor and even the ultra poor population segments of the society. Thank you.